Floor Show. Joining me now on set is Federated Hermes CIO Stephen Auth. Stephen, it's great to see you.
Likewise, Cheryl.
Well, I want to kind of switch gears. We talked about trade. We talked about some of the stocks we're watching, but the data is really your focus right now. Kind of that hard data that we get and then that soft data that we get. That really has created a bullish environment for you right now.
Well, we're more soft data folks because we're trying to look forward. Hard data is looking backward. That's why it's hard. And for most of the summer, people have been talking about this gap between the soft data, which was softening, and the hard data, which was still okay. And now the hard data is softening, especially the jobs market number last week. That's a rear view looking number. It was in the midst of the trade war, the tariff uncertainty, the uncertainty about the one big beautiful bill, waiting for deregulation to happen, all the elements that are very positive for the economy of the President Trump's agenda hadn't come through yet. What we're seeing now is that even as the market is focusing, and the Fed for sure is going to focus on these hard data, which we think is good. I'm glad they're doing that. In the meantime, the soft data is starting to get better, which you would expect it to do. We just come through a period of big uncertainty. It's off the table now. A lot of pent-up demand is happening. A lot of things are spiking, like air travel is spiking. The Dallas Fed's real-time economic indicators up 100 basis points in the last month. You've got consumer sentiment survey up 10%. Michigan consumer confidence, small business confidence up 10%. And from my perch, you know, as the CIO of a big equity group, we see every IPO that gets done. And we're just besieged right now with companies going public, trying to tell us their story, you know? And the M&A activity is picking up, which is, we had 4 takeouts in the last month, you know, in our small cap portfolio.
Right, and you know, just to put a fine point on this, what you write is that spring, you know, that there was a soft patch. There was. You cannot deny that we went through a soft patch. And the market certainly had a bad reaction in the spring to all of the tariff uncertainty, especially the initial announcements. But you say maybe we bottomed early summer. We're now improving. So you're making the case here that we're going to have a strong second half of 2025. And we heard that from some of the banks in the earnings reports when they talked about M&A and IPOs. They said that, look, deals are not dead. Deals are in process. But that process is more happening this current quarter, not the past quarter that they were reporting on. You also talk about green shoots. And I always like to hear that word because that is such a bullish, you know, phrase that I think gets my ears kind of perked up. Explain. Right.
Well, I went through a list of green shoots on the data side, but then you've got all these companies that are starting to perk up, right? Underneath the surface of all the talk of the Mag 7, there's other sectors of the market here that are bouncing pretty hard and almost leading it. Industrials, very cyclically oriented. Smaller cap stocks, financials, regional banks. These are all areas that do better when the economy starts improving, and they're starting to take us higher. The market's telling us something. Those are areas that we like going into the back half of the year. In fact, our view, as you probably know, I mean, we've been very bullish through this, sort of holding the line in the sell-off. We added to growth stocks down there in March. And we've been looking for 6,500 on the S&P. We're getting closer now. At one point, it looked like a crazy number. 7,500 next year, 6,500 this year. We think rather than getting a big correction, which a lot of folks that have been bearish are now calling for, we think we're looking more at a rotation here, where you'll start to see the market rotate into some of these more cyclical, more risky areas of the market that now are probably okay if, you know, the recession calls off the table.
Is the industrials call, well, 2 questions. Is the industrials call, does that relate to the AI build out of data centers across the, as well as you heard me mention about what the European Union has promised to invest in the United States, billions of dollars. They say that they'll invest here. You're saying the build out is what?
Yeah, stocks like Comfort Systems, which is a name we've used on this show, Fix, you know, that's a big beneficiary. Train, they're blowing out numbers. They had a great earnings report last week.
Yeah, you also like TXREX, and I have to say, we actually have the CEO of TXREX, TREX, coming up on the program in just a few minutes. Brian Fairbanks is going to be joining us. And why do you like TXREX? I mean, this is tied to the housing market. You know, they do decks, composite decks. But I would think that a name like that, you would maybe take a pause or take a pullback on simply because the housing market has been in a real rut for the last couple of years.
Yeah, well, take a look at the stock, Cheryl. The market's taken a pullback on it, so you're dead right. Stock is down at 30 or 40%. It's really gone nowhere. It's just starting to recover now. But the Fed, who is a rear view mirror looking operation, they are going to cut in September. We've got 6 cuts coming out of the Fed.
In what time frame?
Over the next 18 months, so through the end of next year. And that's going to, we think, finally light up the housing market, which has been in, almost frozen for the last 3 or 4 years.
Even though mortgage rates are tied more to the 10-year, the long bond,
but when you start
okay
cutting on the short end, it'll drag the long end down a little bit, and that'll help unfreeze the housing market.
That relief would be wonderful. I also want to look at your calls for for your targets, because these are bullish indicators as well. You say by the end of the year we're going to have the S&P at 6,500.
Well, that's our target. I don't have better.
I'm holding you to it. I'm just saying.
No, I think the risk is that we'll blow through it. I mean, 6,500 seemed like an aggressive target when we set it, but we're only 200 points away. So I also like to point to people that we have a target beyond that. So at the end of next year, we think the market probably goes to around 7,500. We think we're kind of in a very much of a secular bull phase here. All the underlying fundamentals for the economy are good. Stocks beyond the Mag 7, really, frankly, haven't done that well. The market itself is only up 10% year to date. A lot of stocks are up a lot less than that.
Is there anything from a policy perspective for you out of Washington that you would like to see completed? The big beautiful bill has now been signed into law. We don't have the Clarity Act signed. We have the Genius Act signed. That's the crypto world. That we've had a lot of announcements in that realm. You've got obviously a potential looming government shutdown into September when the House and the Senate come back from their recess. Any of that is on your radar right now?
It's a good question. I would like to see the deregulation really start to ramp up here. I think that becomes the focus in the back half and into next year. We could take hundreds of billions of dollars of costs out of corporate America, particularly in small cap land, with some deregulation. And it's already starting. But I think now that we've got the big elements of the president's agenda through, that's what you're going to see next. It doesn't make as many headlines because it's kind of one regulation at a time.
But I would think banking regulation is important to you. I was going to say banking, and I mentioned the crypto regulation. Yeah. So I think that those two things, and even on the build-out front, maybe having the EPA kind of back off on some of the more the red tape, we call them the red tape regulations when it comes to housing.
You're going to see things clicking through now.
Yeah.
And, even regional banks is an area that we like here.
All right. There you go. Stephen Auth, it's great to see you on set. Thank you for being